Hi friends, as we all know that EPFO exam has been fixed in the month of May 2021. So it's important to start the preparation and it's very easy to cover all the portion within 5 months. As I have analyzed the previous question papers in which the accounting subject accounts for nearly 14 to 15 questions. That means nearly you can get about 20 to 25 marks, and it's very crucial for you to get into the final list. So let's start the accounting. I am introducing you to the accounting chapter, that is chapter number 1, Introduction to Accounting, which is the first chapter in ncert 11th class economics, that is commerce section. As we can see in the first introduction to accounting, here the definition of the accounting has been explained. We can see over the centuries, accounting has remained confined to the financial record keeping functions of accountant. But in today's rapidly changing business environment, has forced the accountants to reassess their roles and functions. Broadly speaking, accounting today is much more than just bookkeeping and the preparation of financial reports. That is, in the past, accounting was meant only for the financial records, but in the present scenario, accounting is not only related to the financial records, but it's like, for example, it's forensic accounting, that is, solving crimes such as computer hacking and the theft of large accounts of money on the internet. And then e-commerce is also a type of accounting where design web-based payment system. Financial planning is also an accounting. Environmental accounting. In environmental accounting, the accounting is measured in the terms of the effort that government has put to improve the environment, or in order to improve the road and infrastructure, what was the environmental impact and what its impact on the future upcoming generation. The realization came down due to the fact that accounting is capable of providing the kind of information that managers and others interested persons need in order to make better decision. Here we get to know that accounting is interrelated to the decision making. If at all the accounting information is provided successfully to the management, that is top management, then it's very easy for them to take the better decisions. This aspect of accounting gradually assumed so much importance that it has now been raised to the level of an information system. What we call the present is is, that is information system. What exactly is information system? It collects data and communicates economic information about organization to a wide variety of users whose decision and actions are related to its performance. Try to understand this sentence. It collects the data. That is, it collects the data from all various sources and it will communicate either in the written form or in the vocal form. That is, what does it communicates? It communicates the economic information about that particular organization to a wide variety of users. Who are the users? Users may be the public, he may be a customer, he may be a management, or he may be a decision maker who will take decisions and actions. These are all related to the information that is provided, and this will lead to its performance. So, now moving to the meaning of accounting. What exactly is the meaning of accounting? When does it emerged? In this chapter, we can see that in 1941, the AICPA, that is American Institute of Certified Public Accountants, American Institute of Certified Public Accountants in 1941 had defined accounting. What it has defined, that is accounting as the art of recording. It is nothing but the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in a part at least of financial characters and interpreting the result thereof. Try to understand, here it is at least of the financial character. That is, accounting is nothing but whichever we can measure in the financial matters that we can account. With greater economic development resulting in changing role of accounting, its scope become broader. It was in 1941 that AICPA defined accounting, but in 1966, the American Accounting Association, that is AAA, American Accounting Association, defined accounting as the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of information. Here they have presented it in beautiful format of the flow chart. We can see what is the accounting process. The first comes the accounting process, then what exactly deals communicating accounting information to whom? To decision makers, that is inter and external users. Then what exactly it happens? These will lead to the economic events. This overall circle or cycle is called as accounting process. Accounting links decision makers with economic activities and with the result of their decisions. So it's very important. It can be an objective form question. What is that link? What is that link which links to the decision makers? Accounting is that link decision makers with economic activities and with the result of their decisions. Again in 1970, Accounting Principles Board of AICPA also emphasized that the functions of accounting is to provide quantitative information, primarily financial nature, about economic entities. Accounting, therefore, can be defined. Here is the exact definition. Accounting, therefore, can be defined as the process of identifying, measuring, recording, and communicating the required information relating to the economic events of an organization to the interested users of such information. Hope you have understood what exactly is accounting. It is nothing but you have to define the process. First you have to identify it, first then you have to measure it, then you have to record, and then collecting all this information, that is identification, measuring and recording, you have to collect it and communicate to the decision makers of an organization, to the interested users. In order to appreciate the exact nature of accounting, that is, what exactly is the nature of accounting, we must understand the following relevant aspects of the definition. First is economic events. Second, what is identification? What is measurement? What is recording? What is communication? And what exactly means the organization and interested users of information? These are the four relevant aspects that we have to understand. First is economic events, second, identification, measurement, then recording and communication, as well as organization and interested user information. In this box, they have presented what was the history and how did the accounting developed. As it is being mentioned in ncert, it becomes important for the part of examination of EPFO. First, we can see the seed of accounting were most likely first sown in Babylon and Egypt around 4000 BC, who recorded transactions of payment of wages and taxes on clay tables. Historical evidences reveal that Egyptians used some form of accounting for their treasuries where gold and other valuables were kept. Babylon, known as the city of commerce, it is important. Which city was known as the city of commerce? It was Babylon. You can see Luca Pesilios, a Franciscan friara, that is merchant class, book Summa Dei, Arithmetica, Geometria, Proportionia, and Proportionality in Viens 1494 is considered as the first book on double entry bookkeeping. This is very important. On further sessions, we can see what is one single entry, what is double entry bookkeeping. These are nothing but the part of accounting that we go on see in the proceeding lecturers. So, the relevant aspects that we have to know in order to appreciate the accounting. First one is the economic events, as we have discussed earlier. What exactly is the economic event? An economic event is known as a happening of consequences to a business organization which consist of transactions and which are measurable in monetary terms. Here, the very important aspect is which are measurable in monetary terms. That is, an economic event, we can call it an economic event whenever we can account it if at all it is measurable in monetary terms. For example, purchase of a machinery, you can account it in a monetary term because you have paid certain amount, that is in terms of money, either in the form of check or in the form of DD, but you have paid it in money. Therefore, it is measurable in monetary terms. Second example is installing and keeping it ready for manufacturing is an event which comprises number of financial transactions such as buying a machine, transportation of machine, site preparation for installation of a machine, expenditure incurred on this installation and trial runs. Thus, accounting identifies bunch of transactions relating to an economic event. If an event involves transactions between an outsider and an organization, these are known as external events. That is, if at all a transaction is between an organization and an external person, then this transaction is known as external events. Whereas if at all a transaction takes place within an organization, that is from one department to the other department, then it is called as an internal event. Hope you have understood what exactly is the economic events. If at all you have any doubts, you can comment in the below so that I can answer your queries. In the upcoming further sessions, we can see about the other relevant aspects which we will deal so that it will be helpful for the examinations. In these lecturer series, I will be covering the whole accounting chapter within 10 to 12 lecturers. So keep subscribe to the channel and press the bell icon for the recent notifications. Thanks a lot.